Hey, welcome back to Everyday Economics. It's the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, publisher of the Center Square. Everyday Economics is brought to you by the Center Square. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Friday, January 24th. And joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist. Dr. O, you spent a lot of time looking at the housing market, a lot of time looking at the housing market. It's core to what you do. 2024 numbers came in for existing home sales, and they fell 0.7% from the prior year, from 2023.
That's right.
People might look at that and go, oh, that doesn't seem like it's, a huge dip. We've had dips like that before. Yeah, but not since 1995. So that's kind of surprising. So it's like a 30-year low.
Yeah, the level is at a 30-year low. So the total number of sales in the year goes back to right, and so yeah, I mean we finished the year strong because we actually had an uptick in existing home sales both in November and December. We finished the year strong, which is a good sign of things to come in 2025, but we had some issues last year, right? At the start of last year, interest rates started rising. I think we had a gift from the Fed in December 23. Then you have January, and all of a sudden, interest rates started hike. It started rising, touching close to 8% in the middle of the home shopping season back in April. And so, that really slowed down the housing market at a time where the housing market is the most active, and that's why I think 2024 will go down the books as one of the worst years in a long time for existing home sales. The good news is we're past that. We're at a point that the surge in mortgage rates that took place last year is unlikely to happen again. And part of the reasons why I think this is not likely is because, well, inflation has eased from year-ago levels. The Fed is in the middle of a cutting cycle, although I think we're going to get a pause from the Fed for the next couple of months just to check and see if things are still moving in the right direction. And fiscal policy is top of mind for everyone. And hopefully, the new administration coming in will actually start thinking about reining in deficits. Hopefully, I mean, at least there's some conversation about that, especially from the and maybe even a potential plan coming from the nominee, the new nominee for Treasury Secretary. And so I'm somewhat reassured that we're going to go into the 2025 home shopping season with mortgage rates below where they were last time around.
Mm-hmm. And I mean, at this point in time, I mean, is it a true affordability issue? Do you when you look at in your assessment of the market, is it the interest rate that is creating the pause on the buyer side, or is it something bigger than that?
Absolutely. Right now we got two things, right? We got prices still rising very fast, and they're still. I mean, look, price growth has slowed, but they're still rising. The point is, prices are still rising, and the reason prices are still rising is because you have people that are kind of just the people who are transacting right now are like, hey, I need a house, and so they're going in if they can afford it. And the people who can afford it usually have higher credit scores, higher incomes, and so they're going out there and buying homes, taking the homes from a very small pool of homes available on the market. Look, inventory is still 25% below where it was before the pandemic. There's just not a lot of homes out there, right? And so if you have the income, if you have the financial wealth, you are, and you can afford it, you probably have a very high credit score, very low debt to income ratio, and you're out there and you're shopping. And so you're still contributing to the price increases. Now, affordability, why sales? Yeah, the result, like I said, I think earlier, it's mortgage rates. If we didn't have the mortgage rates increase that we got in February, March, and April of 2024, home sales would have probably been higher today, and they probably would have increased to surpass the 2023 number, which already was very, very low. So do we think home sales will increase in 2025? Yes, actually, I'm very optimistic that home sales will increase in 2025. And the reason for that, again, is once again, unlikely for mortgage rates to continue to increase. In fact, they've been decreasing a little bit lately. We have inflation easing. We have the Fed still in the middle of a cutting cycle. We have policy, hopefully, starting to, at least people in policy circles in Washington, D.C., finally starting to talk about reining in fiscal deficits. And I think that if we can get those things moving, especially on the policy front, in the right direction, then you are not going to get the type of increase in mortgage rates that we got last home shopping season in 2024. And if we can avoid that, then yes, we should see more home sales, more existing home sales in 2025. Remember, existing sales are both a combination of supply and demand. So
Right.
you're going to need, right? We're going to need more sellers to come back to the housing market. And if you have a 4 or 5% mortgage rates, it's a lot more painful to give up that 4 or 5% mortgage rates when mortgage rates are 7.5%, right? If mortgage rates can fall to the low sixes or high fives, I personally think we might end up finishing the year in the low sixes. Then it's a lot easier to move when you have a 5% mortgage rate, right? Those are my thoughts. I think we're probably going to do better in 2025 than we did in 2024. And I see this as a buying opportunity for people who are considering investing. The simple fact that you have a housing unit deficit, that you may have reached the bottom in terms of home sales, only means to me that if things are going up from here and cannot get any worse, then this might actually be a great opportunity to get into the housing sector.
Yeah, fair enough. I appreciate your thoughts as always, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics wherever great podcasts are hosted.